Good evening, everyone. Time for another silver update. Well, we got a good bounce today, and chart showing us a number of things here. First thing I wanted to point out is that I've drawn a line here of what could be called a breakout point or technical resistance that we broke out on that after hours period of the holiday. And then remember, we had the run up to near 50 and then the crash down on the opening trading day and continuing crash. And so I wanted to examine real briefly the volumes that are involved because that's important. This entire move here was after hours, so it wasn't on volume. This is the volume down here. So I don't put a lot of stock in that trading. It's just not a lot of people were able to get in and out at those prices, so it doesn't really establish much resistance or support. It doesn't establish much presence in the market. Therefore, it's not nearly as valid as what we had today. So the first thing I wanted to point out is this breakout that kind of was fake on low volume and after hours, etc. Now it's quite real here on real volume during real hours. So that's the first thing I wanted to point out. The other thing is this move here that everybody considered so spectacular, where we gapped. Remember, we went a little bit here and then we gapped and then we blew up to 50 and then we crashed back down. But if you look at this move here, right here, today's move is actually a bigger move. You see that? This move here from 45, basically from 45 all the way up to nearly 49. It's nearly a 10% move. So it's this is the real thing on real volume, and I think this is much more accurate to go by what happened today than what happened after hours. The next thing I wanted to point out is we're on the 30-minute chart, and we have some nice little tops here in the MACD. So we want to watch and see how the market takes care of these. Remember, I said that the MACD indicator is a trending market indicator, and the way you use it is in a bull market you buy the dips, you buy the buy signals such as here or any one of these breaks to the upside or here, and you do not use the sell ones because you're in a bull market. So if you're in a bear market, the opposite holds. You will sell these and you will wait for it to reset and not buy these. So you'll use these as adding points to your short. So what does that tell us? Well, it's pretty important. As you can see here, we've got these two relative tops here. This one is falling, and this one is rising just a little bit. So there's a little bit of divergence there. Now, if we are rolling over into a bear market and we go into a significant downtrend, then you will begin to see these signals become valid and these signals become false. So we've got a nice setup here to watch on the 30-minute chart. What we're looking for is for this to come down and reset, and then watch what the market does from there. Ideally, if we are in a downtrend, then this sell signal and this sell signal, by the time we generate the next sell signal on a top in the MACD, will be even lower. And so you can build a profitable short position by doing that. And on the other hand, this buy signal right here, when we get another reset of this MACD, if the market is lower than it was when it generated this signal, then that tells us that the buys are not working and the sells are working. So that would be a strong indication that we're rolling over into a bear market. Do I think we are? No, I don't think we are. I think you had a good buy signal at 45. You had one here and you had one here. And I think we're probably going to blast through 50, and then it's going to be a rocket ride from there. But something to watch to determine if that's the sort of market that we're going into. Now, I did do my tick watch today. You can see we have kind of just a normal uppity down, tickety tick type of thing going on right now. But I did happen to record it this morning. I'll play a little bit of that with the volume down. You can see we had the same sort of pattern, and what I started to do this morning was I just started to draw in the lines, because I can see the same pattern of parallel lines here playing out. So as it was trading, I just went in and started drawing my freehand lines that were parallel to these almost, I would call them suspiciously patterned forms of behavior in the market. So I'm going to go in here and draw, as it's trading, I'm going to draw all these lines that seem to be parallel. The one going down and the one going up. And you can see the parallel here, the parallel there. I'm just going to keep filling in these lines and make them parallel so you can see the pattern. And then what I'm going to do is I'm going to head to the front price point and start drawing in the lines as it's trading to see if there's any predictability in the price based on these lines. If there is, then that's going to tell you that this is not a random market, that this is a computer driven, or somebody's in control. It's a non-natural market. It's not a large group of people all simultaneously doing what they think is in their best interest, but it's a pattern of trading, and a pattern of trading can never be generated by a random crowd. So you can see I've drawn a little line in here that predicts where this price is going to go if it follows these angles, and you can see it's actually tracking that line. And I'm going to draw the parallel in here because these are really the only two angles of ascent or angles of descent that this thing takes. It does some zigs and zags as it's changing direction, but then it always seems to reform and correct along one of these lines. So as it's trading, I'm just drawing in the lines as they were in the parallel ones to the ones that were in the past, so that I can see if I can actually predict the price movement. And if I can, that comes very close to almost generating a sort of computer buy-sell program based on these types of predictable moves. So I don't know what it means. Now, the other thing I noticed today is that, and I don't know what this means, but if you look in the time ticks, you can see, for example, here 23 to 24 is this small space. Now it's changed. 22 to 23 here, and 20. These don't seem to be evenly spaced. You see 26 to 27, that's a big, and now it's changed again. So I can't say for sure that there is some significance to this, but it sure does seem bizarre that you can practically predict the direction of price just based upon these parallel lines and unique angles that seem to form. I'll let this play out because I think there was one last run right along one of the lines, and I wanted you to see that. So I'm going to accelerate forward a little bit to where that happened. You can see it started down now, and it's tracking right along that. Then we get an up, and you can see it run. It's running right along that line. Not perfect, but shows that the line that I drew, it seems to be tracking it nearly perfectly. What does that tell us? I don't know. You tell me. But I can tell you that it's not tracking that way right now. It's not trading that way after hours. It only trades that way in New York in the morning. So don't know what to make of it, but my gut instinct is it's telling us that this is not a freely traded market. This is a computer controlled market. So be that as it may, take it for what it's worth. Wanted to jump over to our option that we've been tracking. It's at 122,000 open interest. And you can see it lost 5 cents. 5 cents off of 13 cents is down to 8 cents. That's a big whack. So I think it's just going to track right down to 0. A big flash in the pan. So I don't think there's any significance to this. Probably at some point when we get down to 4 or 5 cents, you'll see them liquidate 60 or 70,000 of these, and it'll go just to being a flat option like the rest of them. Not a real big deal. So other than that, I don't have much more to say tonight, except that I think that we're probably going to go through 50. Our MACD has corrected and has indicated it doesn't have a lot of intention of going down. Our 2-hour has rolled over to the upside. We're waiting on our 4-hour. Well, no, our 4-hour has gone to the upside now too. So we're waiting on our 8-hour. And our 8-hour seems to be doing kind of a U-turn in the road. We've seen this before. If we go back to, let's go back out on our chart here. Let's go back out on the daily. You can see our daily did a nice little U-turn in the road here. Everybody thought, well, we're a high on the MACD, we're rolling over, we're definitely going to have a downdraft right about 30. Nope. Just blew through it. So could be looking at the same sort of thing here. A nice one on the 2-hour, but on the 8-hour it just looks like it's going to turn around and try to find a higher high than this. If we do find a higher high than that on the MACD, it's going to have to be around $65, $70, I think. And if we blow through it and continue up to who knows how high it can go, 75, I think $75. If it starts running, it could run to that really quickly. So I don't think this bull market is anywhere near being over. It's too strong. And of course, you know how I feel on the fundamentals. If you don't understand all the fundamental reasons for owning silver, I suggest you watch all of my Office series that will pretty much explain to you why. I don't put much stock in the testimony of Bernanke today. To tell you the truth, I didn't even watch it. I didn't even look at a transcript. I really don't even care, because different than a lot of people, I don't view silver as an inflation hedge. I actually view silver's role as an inflation hedge as the third most important reason for investing in silver. The first most important reason I see for investing in silver is just the simple supply and demand fundamentals of this particular commodity. If it were rhodium, I wouldn't have a problem recommending it. Or if it were platinum, it doesn't matter what it is. Or if it were coffee, I don't care. The fundamentals in silver, just as a commodity, are the best fundamentals that anyone has ever seen in the last millennium. That's the first reason. The second reason to own silver is as a deflation hedge, is as money that doesn't belong to someone else, money that isn't someone else's promise to pay you, money that can't default. Now, lastly, is silver as an inflation hedge, and we're seeing that now. If we jump over to gold, we got a nice, beautiful breakout and strong ending in gold. So gold has told us it's going much, much higher, and it's nice to see gold go up. Now, actually, silver would be higher, but because of that bizarre Asian blowout, and we're not going to count that. But so gold is an inflation hedge. Gold is a true inflation play primarily, number one, inflation. Number two, deflation. And number three, commodities. So gold's different than silver. I don't see them at all the same. And I think that's why silver's been so much stronger. For those of you who aren't aware, the performance of silver during this cycle, and the cycle being just this year, this last run. If you remember last year, silver turned in an 84% yearly performance, I think it was. So far this year, silver's up 56.92%, gold's up 7.63%. So all the people that say that silver's going up because of inflation, if silver's going up because of inflation, why is silver up 56.91% and gold's up 7.63%? When you have that answer, go ahead and let me know. We'll talk to you next time.